Hey everybody, welcome. This is Mark. I want to give a little recap for some of the trading action on Tuesday, the 14th of March. As always, you need to be aware of your risk and understand that financial markets carry risk, and it is always best to understand it before you ever put on any type of investment. Understand your risk. All right, let's get going. So let's take a look at, and so just a little frame of reference here, crude oil. The day before the FOMC, some of the markets were fairly quiet today. Crude oil gave us a little volatility. So let's think about, I want to talk about the analysis I was looking at coming into the morning. So from my morning news report, my morning newsletter, I was looking at crude consolidating coming into this day, right? So this is what I had in focus here coming into the U.S. session, looking at these consolidation zones, and that's what I wrote this morning. I said crude consolidating recent losses, which is what was going on, but still prefer to trade from the short side and target a move to 47.70 initially. So here's your 47.70. It was achieved quite nicely, and then on to 45, not today, but over coming days. So I still think that's quite doable, but in the short term, obviously, late afternoon U.S. session, starting to see a little bit of a bounce. So let's take a look at the day and kind of how it developed, and more importantly, how we can start to be involved in some of this. So the initial sell-off comes amid some headlines, and we had a little headline whipsaw. But even with the headlines, you still have to think about level to level to level. And so when you're coming down, looking at this movement, you have to think about where has the market been involved prior to that. And so all I'm grabbing is the breakdown levels from Friday. So yesterday was a very tight, not much of a range in crude, and we didn't really challenge much of anything. We held new lows under 48, and that was it. So I'm looking at the breakdown levels from Friday. And if I go mark breakdown levels from Friday, I can grab this 49.40, which was some consolidation. We broke through it. The next consolidation was 48.80. We broke through it, and then we tapped back to it, right? So you see this idea of breaking a level, challenging again, continuing, breaking a level, challenging it again. So when you see that level come into play, you're looking at that level for a frame of reference. So you don't really get much of a test there yesterday. You fell short of it. But today was something quite special. Traded right to that level. So think about again, what was the mindset coming into today? Well, coming into the US session, I preferred to trade from the short side on rallies. Where did we rally to? We rallied to a prior resistance and breakdown level. So what did we see from this level on the 10th of March? We saw that the market tried to get back above 48.80, couldn't do it. And that's where it eventually made the new lows, which were not fabulous. It was 90 cents lower, but it's a good frame of reference for a 90-cent move. So for all these short-term traders, what are some ideas here within this? Well, obviously, to be able to sell right at that level, it was there. That level was there 2 days ago. And this is what so many short-term traders forget about, and something that I really focus on in my Monday classroom sessions. That level has been there. So I don't care whether you're a medium-term swing trader or a short-term day trader. That level was there. The mistake that the short-term trader tends to make is the idea of watching it hit the level and reacting after they see a 40, 50 cent move off of it. That's the mistake they make, because your risk can't get any tighter than to deal right there. I mean, that level was there. The high was 79. What did you really have to risk? And what did the market tell you about that level 2 days ago? It told you something pretty key about it. So again, these are concepts that I really go into in depth. From the daily trade, what became interesting to me, because I only wanted to trade short side coming into the session. And after that break, there wasn't a ton of short side activity. The real little intraday zone that developed was right in here. And again, it's coming from this consolidation. That's all it's coming from, is this consolidation. But what became more interesting to me, now again, think about where crude has come from, above 53. So this is a pretty fast move to see $6 down in crude. That doesn't mean you have to be bottom picking. If you're going to fade these moves, which I don't encourage for many people, but if you're going to fade, you have to do it at places that start to make some real good sense. What happened down here at the bottom was kind of interesting because as crude is just drifting lower, some other headlines come out. And again, I think it's tough to chase headlines because you're not going to be competitive with algos and computers and high speed. That they're going to beat you to the headline punch. But that doesn't mean the headline can't affect some of the movement, and that's really what you got here. Another headline about Saudi and their cuts and OPEC, and that's really what was going on. And so what I really stress is backing away from that headline risk and understanding, well, give me bigger picture, what's going on. All right, so let's think about it coming into this zone. Coming into this new low, you had a little bottom, which was at that point, if you look at the chart like this is what it looked like in real time. You don't know what's going to happen at 47.30, but at that point there's a potential bottom edge forming. And then it breaks. But what happens on this break is that break is over 15, 30 minutes is reversed. So it's rejecting those new lows. So look at now at the pass back to this same level that was established at 9:45. You had a test of that at 12:30, 12:45, and 1 o'clock. This level, I'm not talking about the lows because those lows were rejected. Those lows were rejected. So this idea of buying into this dip made a lot of sense. Made a lot of sense. And it was, again, very tight risk. So it made sense because the buyers were there. The buyers didn't let it come back down to that level, and it was really a slow drift. But what happened on the next test of this 80, right? So we marked the 80 level at 8:15. You got a test of it on that quick spike, held, test, held, and now all of a sudden it's not rejecting that level anymore, is it? It's not rejecting that level. Once it gets through, do you guys see anything from here to really stop crude? Hence, look at the bounce in crude from that level, right? So it's not about always, is it ideal to buy bottoms or bottom edges? Absolutely. But also understanding what's in your path. The only thing I could really come up with is a very short-term bottom edge for the day, but there wasn't much there. This is really the spot you want to be looking, 48.60 to 48.80 for targets. And we didn't trade to 80, but we traded 56 from that move. I mean, that was $1.30 late afternoon with no real downside to you at all. So a couple interesting things in crude. Crude has given us a little more volatility lately. I'd like to see that continue, especially from a shorter term perspective. It's always nice when you have a market that will at least show you two-way volatility. But again, this was a very short-term look. Remember, this crude move started days ago. It didn't start today. So understand, if you're focusing on it from a short-term trade, where you've come from, and understand who's controlling the markets at what level, and where can you position yourself to deal from strength. And so I like to trade with the side of the trend, the momentum, but there are times where it makes some sense to fade. And for me, the idea of fading today was not that strange. It would have looked a lot like this action on the 9th of March, which is big negative candle that can't continue lower. So as I'm talking about, the origin of this sell-off was not, again, today. It was a week ago. So that's what you're dealing with. All right, so for everybody, for 14th of March, coming into FOMC day tomorrow may be a little slow in front of the FOMC. Wish you all well. As I said, continue to manage your risk. That is the #1 priority. And send in any questions. If you have questions, mark at compassfx.com and go from there. All right, guys. Cheers.